Dillon from Atlantic Bridge. All right, he's here. Hussein Kanji from Hoxton Ventures. I haven't seen, there he is, okay. And Douglas Hansen-Luke from Future Planet Capital. And Patrick Gow from Cocoon Networks. He had to commute a long way to get here, so let's give him a special round of applause. Andy Kaye from Our Crowd. I saw Andy last month in Israel, and I know Our Crowd is expanding here in London now. Kevin Lin from TUS UK. TUS I know from Hong Kong and China, and I know TUS is set up here in the UK. Finally, Mark Thompson. Where is Mark Thompson? Okay, he's the tallest, always the tallest person in the room here at Silicon Dragon. So Mark, come on up. And I know Mark's just back from Hong Kong, so he's going to be sharing some knowledge from his recent Hong Kong trip as well. So let's get some mics over to everybody. Pass it on down.
Thank you.
Okay, we'll start a little in the traditional way of having everyone just say 1 minute description about what they're doing, what kind of projects they're working on now, and who they are. So we can get some context later when we dive into the Q&A. So why don't we start with you, Kevin? I know your partner David Lamb for many years, and nice to meet you here.
Thank you.
So thanks, Kevin.
Yeah,
go ahead.
can you, just checking on the microphone, all good?
Everybody can hear Kevin all right?
Good, thank you for including me. It's a pleasure to be here. Very interesting panel. Great pictures. I get my bike repaired, wear great underwear. It's going to be fantastic. So,
Yeah.
Atlantic Bridge, I'm a co-founder, managing partner.
Yeah.
We're about $1 billion under management across 6 different funds.
Yeah.
Just to keep it short, within 1 minute, for purposes of this evening, we have 2 primary types of funds. We have Atlantic Bridge Capital, which is the name of the firm, and that is essentially investing in Europe and bridging across the Atlantic. We have offices in London, Dublin, and Palo Alto, California, delivering that fund. We also have a second style of fund, and we're on the 3rd fund of that, raising the 4th. We have a second style of fund, which is called Summit Bridge Capital, which is relevant to Silicon Dragon, and that is essentially investing in European companies and scaling them into China. There's usually a US angle in that. We've just announced the close of our second one of those funds. It's about a $200 million fund. It's called Summit Bridge Capital because it was a joint venture between West Summit Capital and Atlantic Bridge. We're really good at investing, but we're crap at marketing. So, so we're investing out of that fund. We're investing out of Atlantic Bridge Capital.
Okay.
And we're bridging both ways.
All right. Good. I think you just need a unified name now.
Yeah. Let's call us investor.
Yeah, investor. Generic investor. No, it's just kidding. Hussein.
So I run an early stage fund here in London that does European companies that usually bridge back to the US as well. We usually invest at the seed or Series A round into companies that are effectively in brand new market categories. We're usually the first money in. We were early investors in Deliveroo, which is a bit more of a household brand because you see them on the streets, and we were an early investor in Darktrace, which has also done really well. If you guys have a GP doctor, we're an early investor in Babylon, which is kind of in the same space. So well, we've had a good run. We're about 4 years old now. So
I'm Douglas. I'm the founder of Future Planet Capital. We've established and launched the first global top university fund. So we're investing in companies that have scaled up out of the ecosystems of top universities and centers of innovation. So Cambridge, MIT, Harvard, Stanford, and with the China link, Tsinghua University, where we're partnered with the X Lab. So we're looking for bright minds who are addressing global challenges profitably. And we've teamed up and we're sponsored by sovereign funds and large pensions to help them gain scale-efficient access to innovation.
Thank you.
Okay.
Hello everyone, I'm Patrick. I just joined Cocoon Networks. as the Deputy Head of Investment. Before I came to London, I co-founded a private equity investment firm with several state-owned companies and listed companies in China. We made investments in robotics, artificial intelligence, and green energy. I found some great opportunities in cross-border technology transfer between China and Europe. So I joined Cocoon Network, and I believe I will work towards bridging the gap between East and West. And this year, Cocoon Network will bring London Tech Week, the first time to China. If you are interested in the China market or meeting with Chinese investors, you can join us in China.
Andy Kaye, I'm President and CIO of OurCrowd. We are a global leading crowdfunding platform. We've funded over 140 companies. We have 15 funds which we've raised either as GPs or LPs, raising over 650 million. Our investor base is comprised of 25,000 investors from 110 countries around the world. We invest in technology, broad technology, agnostic. Currently 70% Israel, 30% rest of the world, and we are eagerly looking to bring that to 50-50.
Well, 1 minute introduction, right?
1 minute.
Well,
We'll come back to you, don't worry, you know, 1 minute now.
to be honest, I think 1 minute is not enough for introduction to our company. Because you know that last time I did the introduction, I spent 45 minutes and half of the room went sleeping.
You've already used up 30 seconds.
Right.
You used up 30 seconds.
Thank you. Okay, my name is Kevin. I think Kevin might be easier for English people. I've been using this name for almost 20 years. And I'm now the president and representative of TUS Park in the UK. The company's name is TUS Park, TUS Park, meaning Tsinghua University Science Park. So we are the functional arm of the university to develop science park, operate science parks, provide science and technology services. And for now, we have 3 main business lines, creating a triple helix. And they are the science park, as we initiated our business. And the second one is industrial business lines. So we created 7 industrial clusters. And the third one is the financial support for all those development. We have established the investment fund systems from the investment fund like seed fund or angel fund to support those early stage business until very late stage fund like M&A fund or pre-IPO fund to support the development of those large players of this in the industries.
Okay, all right, thank you. And let's move on to Mark.
Great, I think I can be kind of short and sweet on this. So I'm Mark Thompson. I'm a partner with the law firm of Sidley Austin here in London. I focus on private equity investments. The kind of work that we do is going to be in the later stage. So when these companies get sold, ultimately listed, things like that, usually work on the exits. For purposes of today's conversation, we do a lot of work representing Chinese funds, SOEs, banks, and things like that, bringing capital into Europe and finding investments here, as well as Israel, which we can talk about later. But that's what we do.
Okay, good. So are any of you working on deals right now together? Anyone working on a deal that brings in another person up here?
We're working a little bit with Sidley.
Working a little bit with Sidley, okay. What about the university-connected people?
We've been looking for you. We have been looking for you all
So
over,
finally.
so I'm so pleased to have found you today. Yeah.
That's
All
great,
right.
thank you.
Okay, good. A China-UK connection right there. So what kinds of investments are you interested in making these days? We've gone through the whole VR cycle. We're deep into IoT. We're into AI. We're into crypto. Anyone else doing something else beyond these areas? Biotech, I guess, is another one. Yeah, go ahead.
Well, I think the sector sectors you've listed, we've all been investing in.
Yeah.
However-
Everybody here has been investing in those sectors?
Well, I
Yeah?
would assume.
Okay.
But certainly our firm has. However, I don't think those sectors have come together with edge computing the way they are currently. If you're at the Mobile World Congress, you would see. Yeah, sorry, can you
Yeah.
not hear?
There you go.
Better?
Yes.
Yeah, I was just saying, I think the sectors AR, VR, AI have been invested in for a while. We've had lots, several exits in those categories, but I don't think they've been brought together the way they are currently. So you now have a push to connected devices, edge of network computing. All of those are deploying forms of AR and AI, I think in ways that we haven't seen before. So they continue to be areas of investment. And at Mobile World Congress, you would see the telco carriers are trying to bring 5G networks to the edge to reassert their relevance in that whole environment. And obviously, we heard earlier, you've got blockchain opportunities to deploy in that category as well. So I think it's all coming together.
Okay, anyone else on this question?
Construction technology.
Oh,
We really think it's an area that's ripe for change.
Yeah.
We're seeing We're seeing startups using drones, using other technology inside the building, and we think there's a lot to be done there.
Yeah, we have to stop all these bridge collapses, right? And other collapses. Infrastructure is a huge issue. Okay, anyone?
We've generally not taken a sector view on anything. When we see good stuff, we write a check. If we were smart enough to figure out what the good stuff was, we'd go build a company. So we're not that smart, so we write checks instead.
Okay.
We take a different view, but we're definitely not claiming to be any smarter. So we take a thematic view. So we look at global challenges, climate change, education, health, security, sustainable growth. Any problem that impacts 1 billion people is an issue for governments of the world's biggest corporations. If it's a problem that big, then there's got to be value in solving it. The question is whether you can solve it profitably, and why hasn't someone done that already? And that's where, if you're then taking the brightest minds and looking at the research that they've taken out from top universities and being supported with a lot of non-dilutive funding so far, and they've succeeded for their first 3 to 5 years at Series B, Series C, then maybe you're doing something where it's not as risky as taking a pure sector bet and saying, I'm going to buy everything in blockchain or ICO.
Right.
So for us, a couple of examples that we're looking at, a couple of early stage ones from China, one in climate change, nutrition. It won the President's Award at Tsinghua University from their X-Lab. So that's new coating technology for solar panels, particularly good for our clients and investors in the desert in the Middle East, where they have to brush their solar panels quite a lot for the sand. Another one is bioplastic, and they're both President Awards companies coming out of 4,000 entrants in Tsinghua over the last few years. They've already deployed about 200 million to the top 100 companies. So we're coming in after some very smart people and hoping we're actually then addressing a great problem.
Okay.
Yeah.
So after hearing those pitches, I just kind of curious, when you evaluate a particular company to invest in, a business to invest in, what's more important to you, the team or the technology or the business model? What's the priority?
Well, it depends on the stage.
No, it has to be at early stage. Let's say they've
Well, if
already
it's early
raised
stage,
seed and
it's the
they're
people
looking to,
because-
okay.
Because the plan,
Okay.
the people have to bring tech with them, but it's the people, because the plan's going to change
All
about
right.
4 times.
All right.
I think we're the opposite. We look for brand new markets. A good team can hit a bad market and struggle. A good market can lift up virtually everybody.
All right. Yeah. Go ahead.
Oh, I feel very guilty. We're going to rush this over to the other side. But yeah, early stage, I do think it's the people. But we want to make sure that you've got a following wind. So you're going somewhere where there's a lot of demand for it already, hence the global challenge approach. But then also, not too big to fail, but you make sure if you're investing at the growth stage at Series B or C, that they're already, the existing investors are re-upping, or at least there's some of them re-upping, that they're operating partners. So you know that whether the people can't continue. Not everyone can take it from early stage seed to a mature company, but you know there are enough partners in there that whatever happens, it's going to be a push to make it happen. And then we de-risk it with our end investors.
Okay. Anyone else on that topic?
Yeah, I think in the early stage, the team is the most important factor we will
Team.
consider in the investment. But I think the business model is also very important. Just like as you are a leader, you must have the ability to execute your plans. So for a start company, although you may have a very advanced technique, if you cannot make approach to for this technology to as many as people or in the market, I don't think this company will survive for a long time. So I think the business model is very important, and that's why our company, Cocoon Networks, is aiming at provide financial consultancy or business consultancy for companies to expand their business.
So what do you think about the prospects for UK-based businesses going into China? And this could be at any stage. I mean, it can be an emerging company, it could be an emerged company, it could be a startup. Is there any hope out there or not? Okay, Kevin?
Yeah, thank you. I guess I should be responsible answering this question, because exactly this is something what we are doing now and will be doing maybe in the next few decades or even longer. What we are doing now, we have established 2 science parks in the UK, and using these 2 science parks as platforms to bring the UK business, especially the businesses with the hard technology value, to expand their presences in China. So I would say that in terms of competitive advantage, the UK business, no matter in what stage, like in early stage or scale up, or even they have their positions in the industry, in the market, they have some leading or cutting edge technologies in the specific sector. We could help those businesses to set up a legal presence and expand their business in China, in the Chinese market, with different models. Some like we could use or try to have some direct investment into this business, and we could find the proper partners for those businesses, and we could also find some non-dilutive government capital support for the next stage business development for those.
And I think Sidley, with offices in China as well, is here.
Let me just add a couple things to that. First, investing into China, if you want to grow your business into China, it's not easy. I know we heard initially with the conversation about Uber, saying how great it is to go over there. And I think it can be great over there. What I would tell you, though, is we've seen a lot of clients go over there and lose money in China, or go over there and can't figure out how to get money out of China. So it is, it's difficult, not easy at all, but that doesn't mean you shouldn't do it or that it's not possible to be done. Many companies have gone over there and made a fortune. The key, and I wouldn't say this is necessarily universal, but one key for success that we have seen, I think you were kind of alluding to this, is partnering with local players there.
Yeah.
If you're going to go to China, it is best to partner with somebody that knows China. I think a lot of people up on this platform can help you. We can help you in different ways. But finding the local partner is really important because the market is different from here. There's obviously lots of different rules, regulatory, tax, all that kind of stuff. But just engagement on a day-to-day basis is different over there. And there are great opportunities, but partnering, I think, getting the right partner with you is critical to success there.
Okay, good. I want to switch gears a little bit because I want to bring up something that's been very much in the news, and it's something that impacts both China and the U.S. and the U.K. So this is the whole aspect of these dominant tech companies becoming more and more dominant and taking over more and more control over society and our lives. And I'm just curious about where do you think this is going now with, particularly if you look at social media. This plays out in China, and it plays out very big internationally as well. And so where do you think this is going? Are we going to start to see new regulations for social media, drop-off in usage of social media? Are we going to start to see new models evolving that can address the issues of privacy and security and issues and political persuasions that we're dealing with today? So we have the FANGs in the U.S. In China, you have the TMD and also the bats. And each one of them is getting more and more powerful. So what do you think? This is kind of a big picture topic, but since it's very much in the news, I want to get your thoughts on it.
I think it's pretty clear that these large corporations are amassing a lot of information. And if we're just looking, I was reading on the way over here today, Facebook's lost 75 billion valuation over the last few days. So that is going to start leading to considerable analysis by the regulators into how they operate. I think, actually, let's spin it around because the startups here, that's an opportunity for a lot of startups.
Yeah.
So I think new players will have an opportunity to get into a market which right now is dominated, and a lot of smaller companies are actually building their exit strategy about whether the bats or whether Facebook and Google and Alibaba, et cetera, will buy them.
Yeah. Yeah, this could obviously affect M&A as well.
Yeah.
Yeah.
I don't think any of this should come as a surprise. I mean, if you look at the last couple of decades of the tech industry, we built incredibly valuable big businesses that ended up acquiring monopoly power. Microsoft was probably the best example. You've gone from 100 million devices connected to the internet to like 2 billion devices connected to the internet. Why would you not think that the next generation of winners is going to be 20 times more powerful? It just kind of makes sense. Mm-hmm. I think the two things that are going to happen is I think the platforms are going to have to figure out how to get better at policing themselves, because if they don't, you're going to see the backlash that you're seeing occur. And the Facebook API, if any of you guys built apps on top of Facebook, was atrociously bad. I mean, the amount of data that you could pull down in the early days on a user, and the only policing was you're not supposed to do it. You can access it, but you're not supposed to store it. That's a terrible implementation. They eventually fixed that, but they're going to get a lot better at it. And then from a government policy perspective, expect the Europeans to produce the kludgiest, worst possible set of regulation in the absolute best interest of the customer. So if you look at European regulation, it's usually the best from a consumer protection perspective. But look at the cookie data law. I mean, how many times you have to click that stupid thing that says accept? I mean, it's the kludgiest, dumbest system in the world with the absolute best intention for consumers, just implemented atrociously bad, because unfortunately our regulators are not the smartest people in the world.
I think this is the most exciting area right now in the world for value creation and potentially value destruction. So, we all know that we've made the FANGs, we've made bats by giving up our data for free, or it's a barter. We're getting something in return. We'd get value, otherwise we wouldn't use Google or Facebook or Amazon or Baidu. But when we, the consumer, start having the platforms and the technology to allow us to charge actual money and a price for the data that we're providing to those companies, that's when we have power, potentially. The thing is that they're all a lot bigger and a lot richer than us. So it's very easy for me to say open data is going to come in and we're all going to start charging Amazon for our data. But they've been thinking and deploying and putting their money to use and trying to find out how they can be the people that own that platform. So this is where last time after Hussein spoke, I said I disagreed with him. This time, I think it's absolutely the most important thing. But it's whether or not governments put up a regulatory framework that allows individuals to capture some of that value and allows startups and others to be able to build a new platform and destroy these monopolies, or whether the legislation makes it so complicated and the regulation makes it so complicated that only the biggest companies will be able to survive, which is traditionally how European regulations worked.
Just one quick thing. The single biggest problem with European regulation and regulators in general, I think, is that they produce fixes that are one-time fixes versus iterative fixes. So you end up with this thing of the cookie. The right thing to do is that's version 1, kind of sucks, but you understand what it does. You should then have version 1.1 and patch the legislation to make it better and continually iterate to keep up. But instead what you do is you get these draconian regulations that then just get ossified, and then you're stuck with them for the next like 10 or 20 years. If they just made this stuff iterative, it would be really, really, really good.
Yeah, so I'll give I mean, I was one of the early executives at Microsoft. I was the monopoly. I went through the DOJ and the EU inquiry, and I was an official spokesperson who had my head handed to me by the press for quite a while.
Kevin,
So I have lived that. We may have been the evil empire back then, but it's a lot more evil now. And no, I genuinely mean that. If anyone, you're all investors in AI. I mean, if you look at the machine learning behind most of these platforms today, if that is not controlled, and I agree with you on how you control it, it's difficult to expect a government to figure that out. But whoever has the most data wins most machine learning environments. And that means most startups can't really get into the space unless they do something really innovative or vertical. But any horizontal platform. I think we have, you know, the US, I spent half my time in the Valley. The US is very much security focused, but not privacy focused in my view. And Europe is much more privacy focused. So I think there is a need at this point, and I speak as an ex-monopolist, to, you know, probably regulate this more. I totally agree with what you're saying, though. You know, Europe's going to make a mess of it because it's very hard not to make a mess of it. But on balance, I'd rather have messy regulation than none at all. Otherwise, I think all of us here in the startup community may as well pack up and go home, because these platforms will have scale that you will just never catch. They caught the bunny, the race is over, unless you have some fair way of regulating the market. It pains me to say it because I'm not a government control guy, but I think this time around we need it.
And it's also interesting if you look at the stats, the data on how much of the actual acquisitions, M&A activity is funded through these huge tech titans. Tencent, Baidu, Alibaba, Facebook, you know, Google. So much of it is being driven today by corporate strategic investment. So is that a plus or a minus?
These guys are not dumb, right? They've seen history, and they've seen how you can get rapidly commoditized, or kind of someone newer entrant can take you out. And so these guys are just a pure defensive strategy, and all of these guys are super cash rich, and many of them are very valuation rich. No matter what market cap has been wiped off Facebook, it's still a very valuation rich company.
Yeah.
And so they have a currency, whether it's stock or cash.
Right.
Why would you allow a potential competitor, when you know that this has happened in the past to other people like Microsoft, why would you allow that to happen to yourself? It's absolutely good business sense to just acquire these companies and acquire them early if they have any competitive threat whatsoever.
But don't you think that the reason they're spending their money so quickly right now, you've got James Mawson here from Global Corporate Venturing, Global University Venturing, they've tracked how Tencent has been increasing the scale of its investments. These tech companies are investing so quickly because they know they've got, I think, they know they've got limited currency. Facebook's just lost a huge amount of value. The moment governments say to consumers, you can sell your data, and what's more, if you can track it, we will tell the tech companies that they've got to pay for that data, then the value of that currency goes down. And that's where regulators could actually do something. Regulators say, you have to pay for your data. And who's going to trust Facebook or Amazon to provide the app that tells them how much you should pay? You'll want an independent.
I think tech giants will have huge advantage in their business. I can share some information from China. As you know, Tencent is a tech giant in China. One of its messenger app called WeChat. The WeChat has 1 billion active users. So Tencent have access to the huge data from its users, which will contribute to its development in big data or artificial intelligence. And these tech giants are too big that they even affect the willingness of some startups to do business. I can share with you some a very interesting business model in some startups in China. Usually we divided a business into two business or two customer, but there has been a new business model called 2BAT, which means to Baidu, Alibaba, and Tencent. Some startups, they did research about what these three tech giants are looking at, what they want to develop in the future. So they designed the product according to the needs from these three tech giants, and they just wait to be bought by these three tech giants. So the business model is called 2BAT.
Increasingly to the TMD as well. Yeah. Everybody knows the TMD, right? That's the next generation of China companies coming up that's giving the bot something to think about. So what about China capital into the UK now? Is there fear of getting in now with the Brexit as an issue? What are you seeing in terms of China capital coming into the UK? Fear of failure or fear of missing out or something else?
I mean, you've had the same thing, I think, and have seen all of this. We signed a MOU a month ago with a subsidiary of China Construction Bank and a part of Sichuan province to invest £300 million into British innovation. So they wanted us to work with top universities in the UK to find the companies that have spun out of them, and they want to put £300 million in, or 3 billion renminbi. Now, getting to the point that Mark's talked about, that sounds wonderful, but how's it actually going to happen? The companies, even though it is China Construction Bank, and they can do some things, they've invested today in Oxford Nanopore, but they can't get most of that money out. So actually, when you look at the detail of it, is 10% will come to the UK, 90% is held in China to fund those British companies that you first invest in and then take back to China. So yeah, there's definitely money in China that would like to do this. The trouble of not having freely convertible currency and capital flows will continue to persist because most British companies are very reluctant to say, well, we only take 10% here, which we can control, but 90% will be in China where we are pretty certain we won't have control. So I think that's a question for any China experts. How can China fix that? Maybe West Summit as well.
Yeah, no, I think that's correct, and that is the issue of getting money out. But I think the desire is there and is increasing because it's very difficult to invest or do M&A if you're Chinese in the US. CFIUS blocks you out of just about everything. You saw the Broadcom, Qualcomm bid, and that makes it extremely difficult. So I think there's a real desire to invest in Europe and the UK. Brexit, I don't think even features on the radar. If it's a good investment, I don't think they care, and they shouldn't. But the issue is exactly as you said, which is how do you balance in getting the money out? That's been our experience, and we have significant Chinese investors in our fund.
I think on that front, there's a couple things to respond to that. First, there's a lot of money from China that's already out. A lot of the family offices from very wealthy Chinese saw these rules coming. They've moved the money to Hong Kong or outside already, number one. Number two, a lot of companies, Chinese companies, have listed in Hong Kong, which allows them to gain cash outside of China. Number three, like a lot of things in China, even though you have rules that are limiting foreign investment, I mean, the Chinese aren't just shooting themselves in the foot and saying, we're not going to invest outside. I mean, they're smart people, right? Those rules apply to some people. They don't apply to others. Some of those rules don't apply to certain SOEs. Some of them don't apply just for a lot of reasons. So even with that, a lot of money is still coming into the UK and Europe. Like I said, as Rex said, I was over there last week. I've met with dozens of companies that have plenty of money, I mean trillions of dollars, not hundreds of millions, trillions of dollars to invest in Europe. So you can get the money out. The problem that we see is not necessarily the cash, it's that a lot of the Chinese investors that have the cash to invest are struggling to find how to deploy the capital. They don't have the people here. If they just go to the investment banks to try to find deals, they're going to be last in the queue. They want to go to Israel. They don't know how to get in there, which is why I know the Our Crowd people were over there last week, 2 weeks ago, I guess, trying to work on that. So a lot of it is access. On the technology side, though, well, step back one point. Since Brexit, we've seen actually a threefold increase in Chinese and Hong Kong money in just the UK. So they don't care about that. They want to understand it. It's not really putting them off. The CFIUS stuff in the US, that is a bar for some high-profile deals. It's not stopping the vast majority of assets. CFIUS doesn't stop that many deals. The little secret that you have in the UK and Europe, though, is that while there is no official equivalent of CFIUS, governments can here stop investments. They do it in different ways, but that is possible. So if there are things that are sensitive from a strategic point of view, you will see the European governments take a look at it. Now, so far they haven't stopped tech investments, but you could see that happening in the future depending on what happens with Chinese politics, and God knows the Russians may meddle with something. So that may cause some problems. So anyway, bottom line is you still have concerns about security issues, but there is plenty of Chinese money. It's access that I've found is their biggest issue.
We are seeing a lot of activity from Chinese. I think still one thing that hasn't changed is that the Chinese companies are still looking for technologies and corporations which are good for China, inside China. So very few are still looking to conquer the world. There are a few starting to, but it's predominantly looking inside China. There is cash outside, but you do find that it's a combination of RMB and cash outside, or USD outside. The only problem is, and it's a significant issue for a lot of startups here, is that inside China, it's a 51-49 relationship, with the Chinese controlling it. There's issues of IP, and there's a lot of question marks. So some companies, when they're looking where they're going to grow, have to look at the globe and decide. Some are pretty focused on China from the offset, and they have to start dealing with it. Others will probably prefer going to other markets before they get to and start dealing with those issues. The Chinese initially started with cooperation and taking you to China and working with you, such as Tsinghua here. Today, I think there is a recognition that they need to, and they're looking to establish funds outside, and those funds will invest in companies which are aligned with the LPs, which are Chinese needs or focus areas inside China. So we see this sort of as an evolution and next stage. There are opportunities behind it, but I think there's also risks. So I think that's sort of have open eyes and be very wary how you go about it.
Sure, yeah.
Well, we, Tospark, actually came into the UK market after the Brexit decision was made. So we will see it this way. It's a gesture for us, or at least a movement for us to get access, get closer to the technology resources and the academic resources and industrial resources in the UK, and which we think we could help contribute to the development of those sectors in the UK by helping them collaborate with the partners in China. And for the issues, the points made by Mark and investors here, I guess two things we cannot bypass. The first one is the capital control. I don't know whether you are aware or not. The central government issued in January this year an order on management of overseas investment of a legal person registered in China, just a legal person, not natural person. So although Mark mentioned a lot of money has already been transferred out of China, if this kind of money is actually controlled by a legal person registered in China, they will need approval for using that part of money. That's the first, and this order has already come into effect from March the 1st, right, just this month. The other issue is the IP protection. Well, actually, I've been questioned by this for many times. Always, I would say 3 issues. The first one is I made a connection with an IP expert in DIT to China, whose name is Tom Duke. He contributed some ideas like the DIT is creating some kind of legal documents for the UK business, no matter in what stage, to collaborate with the local partners in China. That's the first issue, and I guess this could be some contribution for the UK business to deploy in China. The second one is the National Intellectual Property Bureau is creating some kind of exchange, and they are trying to build some the local legal systems for this issue to protect the intellectual property. The third thing is I have many communications with the entrepreneurs, especially entrepreneurs in technology sectors. They mentioned something, I guess should be enlightening. That is, any kind of technology will be replaced by the next generation of technology or development of technology. The only thing you could do to protect your own IP is to run faster than your competitors.
Right, okay, that's definitely true. I hear all the time in Silicon Valley, which is where I spend a lot of time, is that really the Chinese are just coming in and they're paying their tuition to, get the knowledge base, and then they will go back and create something bigger, better, smarter than anything we've seen in the West. So that's always the fear, that's always the risk part of it. And I know, it can be tempting to take those checks, right? But some companies have learned to regret that. But anyhow, we are running out of time, unfortunately. There was another topic I wanted to bring up, which is on the IPOs and the enormous number of IPOs that we're seeing now from China and where they're listing. Some are listing in Hong Kong due to some new liberal rules in Hong Kong. Some are coming to London, so a lot are going to New York as well. Some are going into Shanghai. Any just quick thought on IPO trends? Anyone? Just one answer. That's all we have time for. So who's our IPO expert here? Okay.
Maybe I'm not an expert, but I have some interesting information to share with you. The case is Foxconn, the iPhone supplier.
Yeah.
It took only 20 working days for Foxconn to go through its review for its IPO. Usually, it will take several months, even several years.
Yeah, like a huge queue to be able to list in China, and Foxconn got in so quickly, so there's favoritism.
Yes, this short period of time was regarded Chinese regulators' support to develop so-called new economy in the country.
Right. Yeah.
So this fast IPO case also raised a hot discussion and sparkled speculation in the market that the market believed the China regulator will provide a special IPO channel for unicorn companies engaging in biotechnology, cloud computing, artificial intelligence, and high-end manufacturing.
Sure.
So I think the Foxconn case is just a start.
Okay, good. You heard it here first.